So finally, we got the Fed to cut rates. Everybody got excited. Rates came down. And then the reality of that situation changed real quickly. So as I shoot this video for the September monthly update, and remember folks, for September, we're always looking at August, the data for August. So we got our rate cut, super happy, super excited. But as I shoot this, things have changed quite dramatically. Rates went up by 0.5 point on residential, on commercial. People didn't lock in, people missed the refis, people missed the opportunities. And everybody scratched your head wondering what in the world just happened, because there's so much excitement, so much hype up to that first rate cut. There's so much built in. Rates were lower than they probably should have been. So now we're seeing the effects of back to relying on data such as inflation, jobs, economy, things like that. And on top of all of this, there's natural disasters going on. One major hurricane hit, Helene. Another one's on its way, hitting right now as I shoot this video. But then even more stuff on top of that. We have wars. We have uncertainty. But then just a month out, we have a major election. And that election, is it going to matter? Is it going to matter what happens, who gets elected? Is it going to change real estate? Is it going to change the rates? We just don't know. So a lot of people are, I'm waiting to see what happens. I'm waiting to see who gets in if I'm going to make a move. I'm waiting to see who gets in if I'm going to refi, if I'm going to buy, if I'm going to maybe list my house. So we're in the wait and see game. So folks, we have so much to go through this month, so much data. And if you don't know who I am, my name is Kenny Simpson. I've been doing 1 to 4 unit financing for 20 years. Seems like a while. I focus on helping first-time home buyers to self-employed buyers to those newbie real estate investors, or some real estate investors that might be need to finance their 20th, 30th deal, their 10 deal, whatever it is. I've helped over 5,000 clients, funded billions of dollars of loans. And I shoot this information, this content here to help educate you, to inform you what's going on out there in the market, nationally, maybe in your local neck of the woods. And also, I just want to educate people to understand what does all this noise mean? What does this matter for, buying housing, buying an investment property, rates, where things are going? What are the trends looking like? How's inventory? What do we think is going to happen next month, next year? So obviously every month over month, we look at the data, because on this channel, we just focus on data, folks. We don't worry about the hype. We're not reading from a teleprompter. We specifically look at data, day over day, week over week, month over month. Then we come on here, we look at it monthly, nationally, to see what's going on, what the trends are. So today we're going to dive into rates. We're going to dive into inventory. We're going to hear some good quotes. We're going to see what is going on out there in the economy that's changing data. We're also going to see, how are pending listings? How are sales? Is the market going up? Is it going down? And what do we think is going to be seen moving forward? If you have questions, if I can help you out, please, here's my contact information. Please reach out. You can text me, call me, DM me, email me, whatever is best for you. I'm here to help, here to answer any questions. So those of you that know by now, you've lived in a world where maybe you didn't know what inflation is, and now you know. We're getting close to reaching our inflation targets. A lot of people are confused because that is what the Fed's talked about, is once you reach our inflation target, we're going to cut rates. The economy's come back to normal. We'll get those rates down, hopefully in the 5s and 4s. And we all get to celebrate. We get more people to list their house, more buyers, help people refinance, save on their mortgage payments. And so here we are. Inflation is not at the top of the list. As you can look at this chart below, inflation has come way down, but that's not what the Feds are concerned about. The Feds are more concerned about the jobs market, because the jobs market technically is strong. We were in the 3s, now we're in the 4s. But one of the things we don't like about the jobs market is we've been getting a lot of incorrect, inaccurate information. 11 out of 12 last job reports in 2023 were wrong. A report came out, as you guys might have read or saw, that there's almost over 800,000 jobs that are misreported. And when those jobs are misreported, as I shoot this video, why the rates went up, and if it's wrong, this is why rates go up. So maybe you're locking in a refi, locking in to buy, and you got caught in that mess. And the rate that you were quoted a week or two ago now went up 1/4 or 1/2 point. And that means your payment goes up more, the cost of capital goes up more, it's more expensive to buy the home. And for some people, maybe you just don't qualify. So I can see as a consumer, it's really frustrating to navigate, like, what is going on? Why are we not getting the rate? Why are we not seeing rates come down? They said they're going to cut rates. And remember, that doesn't always come in line. So we're going to go over that today as we dive more and more into the details. So I mentioned unemployment rate is rising, but still below average, right? So unemployment did come down. it came way down, then the unemployment rate came back up, and now it's taking back down. But remember, are we believing this? Are we buying this story because these jobs report are inaccurate? And then they get revised a month later, but we do not see that revised in the rates going down. But when we get a trend that's way above expectations, rates go up and we're not seeing it down. So it's very hard in the environment we're in today. We don't know if this is political driven, if this is data wrong driven, or how the Feds or how the market can believe this when you've literally had almost 95% of what we read or what we hear about is incorrect according to 2023. And actually, even year to date, most of the numbers, the original numbers we got for the jobs report, which are affecting rates the most these days, are basically being revised to the downturn. And remember, why we care about the jobs report, because the Fed does. And if the Fed is feeling like the jobs market's doing good and they're feeling bullish about the economy, that means the market responds saying, rates need to go up. If the Fed's being concerned or has reserves about the economy, feels like it's slowing, and they say that, we hear it in their voice, we hear it in their language, we hear it in what they do, what they say, then the market becomes a little bit more aggressive and brings rates down. So we are in this seesaw of data where it seems like it just goes back and forth week to week, month to month, and it's really hard to gauge and figure out. So I always tell people, when rates are down and it looks good, don't play the rate game. Don't play the market. Lock in the rate, take the deal, and be grateful for what you have, because people that did not do that in the last couple of weeks, they now are looking at a 0.5% rate higher and going, what just happened? They may be slow to get their paperwork in. They were too busy. They didn't think it was urgency. They said, I'll wait and see. I think it's going to come down because my brother's uncle's plumber is a genius and he knew this stuff. So make sure you're listening to the right people. You're watching the data. And if you don't understand, that's why you can tune into channels like this or other people that focus on the data, that report on it day over day, week over week, that really have more of an understanding to deliver the news to you. Nearly 80% of economists surveyed by Bloomberg recently predicted the Fed would make a quarter-point decrease to the range of 5 to 5.25 in September. Well, we all know that the 80% of them were wrong. We were a little bit shocked. The Fed's actually cut a 0.5 point. And you might be saying, well, why did they cut a half, not a quarter? Well, maybe they're going to regret that decision. Maybe they won't. We never know where the economy is until we look further in the future. Maybe 8 months, 6 months, a year from now, we look back to say, did they move too fast? Did they move too slow? Did they cut too much, too little? But they also had a really bad jobs report in July, and now it recovers more, as we come into August, September. And so they should have probably cut a quarter in July and maybe a quarter when they just did. So I think they're making up for the miss in July, and they're here now to cut. So nobody really knows. They don't give us the definite answer, but we just can assume based on data, based on their feelings, based on the fundamentals of the economy, that's what they're saying. Most economists in this expect 2 cuts this year. So we already got 1. We're expecting maybe a cut in December. The expected cut is a quarter more. Does that mean interest rates are going to go down? We just don't know anymore. A lot was baked into that first cut. That's why rates were really, really low. That's why I told most people, take advantage, lock before. Rates are going to come back up. I kind of said the 10-year could come back to the 4% range where it is today when I shoot this video. So we touched around the 350 range. We're living in the 360, 70, and then we shot back up to around 4%. That's because the data changes, whether you believe it or not. The market's going to react to the data, and that brings interest rates up. So like I said, if you like the rate and you got it, lock it, don't play the game. Generally, the rate cut cycle is not one and done. 6 to 8 rounds of rate cuts all through 2025 looks likely. That could be predicting. Right now, the Feds are predicting after this half a cut, they're predicting another 1.25 in rate cuts. So we'll see if we get there or not. I just don't know. It all is going to be data dependent. So I keep telling people, don't listen to anybody else. It comes down to the data. Even if the Fed say they're going to cut, they might not cut if the data. And the data they're looking at is jobs, the economy, inflation, things like that. So could there be things outside of that could persuade them cutting? Absolutely. We went through a thing called the pandemic or COVID. They had to cut to stimulate the economy. There could be wars. There could be natural disasters. There could be economic things that happen that are wild cards or unknown. So they're always ready to move when they need to. But if data continues like this and it's just up and down, you will just see rates continue to go up and down. Should they go lower over the next year? Absolutely, but nothing's guaranteed, especially in this crazy world economy market that we're living in. Timing the market is basically impossible. If you're always waiting for a perfect market conditions, you're going to be waiting forever. Buy now only if it's a good idea for you. Economist says, people always ask, do you think I should buy now or buy later? A lot of economists, the joke is, if you have to ask that question, you're not ready. Look, if you're buying now and rates go down later, great. You're going to take the advantage and benefit of it. Do we think they are? According to everybody, yes. They think rates are going to be lower in a year or two from now. So if you buy now and you can afford it, do it. Do it. If rates go lower and we do not get the inventory, well, you know what happens. There's too much demand and not enough supply. Prices will go up and you'll just be stuck. What defines a balanced neutral market? In general, a housing market with 5 to 7 months of supply could be described as balanced between buyers and sellers. A 5 to 7 month supply home indicates that it is a balanced market. And a 6 month supply is considered a balanced market between a buyer and seller. Those are 3 different quotes from 3 different individuals, kind of give their opinion of what they consider a balanced market. Months of inventory for home to sell. And basically, if you go back, we're on this chart, you're looking, you can go from 2006, 7, 8, 10. There was anywhere from 7, 10, 12 months of, and then now we are sitting around, depend on the market, but somewhere we're sitting around under 5 months on the market. Other markets, you could be sitting out 2 to 3 months. So this is a national average, folks. This is not being where you live. It could be higher or lower. Homes are sitting on the market a bit longer and sellers are receiving fewer offers. More buyers are insisting on home inspections and appraisals, and inventory is definitely rising on a national basis. That is a true statement. Also, there is this wait, as I mentioned at the beginning of the video, this wait and see. Let's see what the feds do. Let's see who wins the election. I don't want to make any moves. I'll make them after I know what goes on. So you're going to see a lot of that. And you can clearly see it by this chart. Homes sitting on the market over history over the last couple of years. Fewer offers from last year, not that big of a deal. This isn't nothing dramatic, nothing monumental, nothing life-changing, nothing that's going to crash a market, just kind of normal market patterns depending on where rates are, where we are in the cycle. Obviously, we're boarding an election, and during election year, as I talked in my last month's video, we went through that prior to elections, typically up to elections, maybe 90, 60 days, especially November, October, it slows. And once somebody gets elected, it seems like people go, okay, we know who's elected. Am I either buying a home or not? And people start making decisions, whether that's business owners, families, buyers, sellers, everybody in life might be hesitating to make decisions right now. People might be waiting to buy a car based on who wins the election. We just don't know, right? Inventory is increasing a little bit, which is good. Still not enough. We need more. When inventory rises faster than demand, prices have to adjust eventually. Increasing inventory levels are a sign that the market is starting to balance out. That is true. We just talked about that. The number of price reductions is increasing, absolutely, as it should if we get more inventory. Typically, a third of the market, depending on the market, every year, a third of the market does have price reductions. That number might be, instead of 30%, 40% now. So some people think it's 0%. That's not true. Some people think it's 5 or 10. A third of the market always has price reductions in any market. That's data. That's facts. The faster the housing supply increases, the more affordability improves and the strength of the seller market wanes. We know that. Which metros are buyer markets right now? Here we go. Top 10, Cape Coral, Florida, McAllen, Texas, Miami, Florida, Tampa, Florida, Jacksonville, Florida, Memphis, Tennessee. Top, which are sellers markets? New York, San Jose, California, San Francisco, California, Washington, D.C., Kansas City, Providence, Rhode Island. I just mentioned a few. You can see on the chart here, but Florida definitely is acquiring more inventory, and obviously it's been hit by one hurricane and another. So you might see some serious opportunities after the storm. Unfortunately, people might have to get up and sell. Loss of property damage, things like that. So, anyways, be on the lookout for markets like Florida where a lot of people moved after the pandemic or during the pandemic. They relocated. A lot of people say, "Hey, I want to get out of here. This is what I thought it was. I want to go back to my home," or I got to go back and work, so I can't work remotely, so I got to go move back to where I was. A lot of that stuff is going on right now. Whether you're selling your home in a buyer's market or selling in a seller's market, you should work closely with your real estate agent to find the best way to market and sell your property. Absolutely. The harder it is to sell your home, the better agent you're going to need, the more experience. So typically, when it's a challenging market, those experienced agents definitely do a lot better because they know what they're doing. They know how to market it. They know how to sell it. They might have a presence on social, a presence email blast, a presence in the community. And they just know how to market, and maybe they have a list of buyers too ready to go. So typically those type of agents definitely do much better than a brand new agent that has no network, no referral source, None of that stuff going on. Home prices are moderating, which we kind of know. Home price right now are selling very quickly. I agree, but homes priced too high are deterring prospect buyers. Yes, that's always typically in any market. Maybe you got lucky during COVID where you're getting crazy valuations and prices, but that's not typical. And right now, if you always overprice a house, nobody's going to buy it. And some people do that because they're just like, oh, I'll just throw it out there, see if I get this price. And you can't expect you're going to get a price or sell. Two things you need to understand. What's the seller's motivation? Why do they want to sell? Sure, they want as much money as possible, but what else? Maybe it is a bigger home because their family has grown. Maybe it's to be closer to friends and family. What's the seller's time frame? Do they need to sell quickly or possible? Will it be a while before they can move to their next home? Always tell people, if you're buying a home and you're trying to put an offer, be aggressive. If you understand what the seller's motivation is, death, divorce, move, family, it could be a life event, natural disaster event, anything. Why are they moving? What's their motivation? How fast they want to go? If they're in a rush, maybe they'll take a better price. If they're not, they're going to be slower. But if you're a buyer and you understand this, that could really help you, how you write your offer, what you're willing to do, and what they're willing to do with you to make a better deal. And sometimes a better deal is just to get the house and close quickly. Sometimes a better deal is to get it cheaper for less. And, it just really depends on buyer and seller. When it comes to pricing your home, setting it at market value or increase the visibility of your listing will drive more buyers your way. This strategy actually increases the number of buyers who will see your home in their search process. So let's go over. Sits on the market longer, deters potential buyers. Price drops can send the wrong message. Under, lost value, decreased buying power, deters potential buyers because they think something's wrong. So here's the thing. When you put your home on the market, the first time you put your home on the market, like the first 72 hours, any agent will tell you this, that is the most eyes, the most watched, the most media, most attention your home's going to get. So if you are priced well, that is a chance you're going to get the best offer. If you're priced under or over, some people think like if you're under, are you playing games to get a bidding war? That might work. But if you're priced over and it's obnoxious, most agents are going to be like, look, that's dumb. They're not serious. Let's not waste our time. But what you're going to do is people are going to throw you these offers and you think they're lowball. And really they might just what is normal, what they think the house is actually valued at. Because remember, if you sell a house, the comps have to come in. If the comps don't come in, that buyer has to just between that gap of what's the value and what they're paying, they have to come in with a difference out of pocket. Most people don't have that, and most people are not willing to do that. So you got to remember that when you're selling your house. Setting unrealistic high prices with the idea that you can come down later doesn't work in real estate. A home that is overpriced at the beginning tends to stay on the market longer, even after the price is cut, because buyers think there must be something wrong with it, or something wrong with the seller, or you want to play games, or you're not serious. And most people that want to buy a house, they just want to buy. They don't want to play games. Experts forecast lean towards a moderation in home price growth over the next 5 years. This translates to a slower, more sustainable pace of appreciation compared to the breakneck speed witnessed in recent years after the pandemic, rather than a free fall in prices. So because the lock-in effect, supply demand, we're just thinking probably home prices are gradually going to grow, or we shouldn't see a fall off a cliff. You never know what could happen, but that is what all the experts are kind of seeing. Here's some charts we have. Home price forecast, median sales price of existing homes. You guys can go through this. Regional percent change in sales year over year. Let's take a look at the home sales real quick. They're way down. We are moving back up. Obviously, we're still far behind. We need more growth. We need more inventory. We need more demand. I think that will come as rates fall, as we get a new president in and things like that. New home sales, as you can see here, we are starting to see a little pickup in growth. But this all is going to depend on supply, demand, and also interest rates, and if there's inventory. Year over year change, current forecast. Doesn't seem like we're ever hitting our forecast because I think it's just such an interesting market, hard to predict. Mortgage rate projections. Obviously, we got some lovely pullback, and then we've gotten rates back up, but still overall rates are not in the 7s or 8s. So thank goodness for that. The spreads between the 10-year and 30-year, which we've gone over a lot on my videos if you watch, that has come significantly down. That's helped mortgage rates. 2025 home price forecast. You can see the average is 2.7. Here's all the different forecasters, what they think is going to happen. Most of them are wrong, unfortunately. And that's it. I'll leave you with this, folks. A lot of people are questioning what happened to rates, what's going to happen to inventory, what's going to happen to the real estate market in 2025. It's very simple. It's all supply demand driven. We've seen that through COVID. We've seen it now. the lock-in effect is real. So if we get interest rates down into the 5s, maybe the 4s for FHA, VA, that will definitely get people off the sideline, maybe list their house. Maybe they're willing to trade up to a bigger house. Also, buyers are going to come off the sideline for affordability, things like that. And at the end of the day, with what really matters for rates and all this stuff is going to matter for a lot of people who gets in the White House, and also what's going to matter what happens with data. So we'll continue to watch inventory. We'll continue to watch all the data. But the biggest things that I'm going to be watching over the next months and weeks is going to be inflation data. And the biggest one is going to be the jobs market data. If the job markets continue to deteriorate, rates would fall. If the job markets is still showing resilience and strength and not budging, and even though the reports come out wrong or right, that is still going to affect how rates are. And at the end of the day, rates matter because it affects your payment and affects affordability. And if rates were 2 or 3% right now, everybody would be out refinancing and buying and be a completely different market. So we know that because we lived through it in COVID, and we know how much demand that does kick up. And obviously, people that are locked in on a 1, 2, or 3% loan right now, they're sitting pretty. Their tax bases and all that, they're not looking to go anywhere. So if I can help you, here's my contact information below. I appreciate you guys watching. Thanks again. Until next month. Be safe if you're there in Florida. If you watch this video when it comes out, I hope everything's okay. We're praying and wish you guys the best of luck. And until next month, we'll keep watching the data. We'll keep you up to date. And if you guys want to share this with somebody and reach out to me if I can help. And also, if you're not following me on social media, check out my Instagram page where I post weekly, daily stuff. And if you're on my email list, you're probably getting this, but you guys should be following me on social media so you get up to date of what's going on in the market, rates, and things like that. Thanks so much. Talk to you soon.